Hey everyone, welcome in. It's Jeff Trapp here with the Jeff Trapp podcast and the Tax Planning Pros. And this month, on the 4th of July, as we were celebrating our independence, President Trump signed the big, beautiful tax bill into law. And now we can finally talk about it some more, but actually give you real facts of actually what passed in that bill. And then after today, we're going to focus on tax tips for the rest of the year. But there's going to be some little tax tips and nuggets built into today's podcast as we talk about the one big, beautiful bill that has been signed into law. So let's just get down to brass tacks here. And I'm going to go ahead and talk about individual filers, what they can expect with the one big, beautiful bill. And then we'll talk more about businesses and some of that type of tax planning. So this bill makes the standard deduction increase permanent starting in 2025 for married filing joint filers at $31,500, head of household at $23,625, and for all their filers, single mostly, at $15,750. They're also going to make the expiring child tax credit permanent, which was at $2,000. They want to bring that up to a maximum of $2,200 in 2026. And that's going to be inflation adjusted every single year. So if you have kids and you're in those income requirements to claim that tax credit, you're going to be able to take advantage of that. They want to make the $750,000 principal limit for the home mortgage interest deduction permanent. So if you have a home mortgage that is under $750,000, all of that interest is going to be tax deductible. If it's over $750,000, some of that's going to get phased out, but you'll get to deduct the first $750,000 of mortgage interest on that. Another great thing that came out of this was the increase to the state and local income tax deduction made permanent from 2025 through 2029, a $40,000 state and local income tax deduction. And that begins to phase out at incomes above $500,000. So those are kind of the big individual ones that really affect my clients and the people that I work with. Of course, there are some other interesting things that came out of the one big beautiful bill for individuals, right? If you have a job that relies on tips, some of those tips may be exempt from taxation. Or if you have a vehicle loan that you pay for personally, depending on your income level, some of that might be tax deductible. And then also, if you have a job where you collect overtime pay up to a certain threshold, that might be exempt from income. But I'm mostly working with business owners and high level W-2 folks. And so those things, unfortunately, don't really help them out too much. But I advise you to consult with a tax professional if maybe you do fall under one of those categories. Now let's jump into the business proposals, or business laws, I should say, that are in the one big beautiful bill. This is a 1,000-page tax bill, so it's a big one. So there's a lot to unpack there. So they're going to restore the immediate expensing for domestic research and development expenses. If you're a company that makes under $31 million, you can retroactively expense R&D expenses back to after 12/31/21. So there could be some amended tax returns that you could have there. And there's some allowance there to accelerate some of those deductions. Some other things that came out of the big, beautiful bill, a permanent lower corporate tax rate. So as you know, when the Tax Cut Jobs Act was passed in 2017, the corporate tax rate was 35%. Now it's 21%. Permanently restore 100% bonus depreciation. So that is back for short-lived investments, typically 15 years and less. So that's your furniture, your fixtures, your equipment. If you do any leasehold improvements on property, you're going to get 100% deduction. And what that also brings back is, hey, if you need a private jet this year and you use it 100% for business, you get 100% deduction. Or if you buy a vehicle that's over 6,000 pounds gross vehicle weight and use it 100% for business, like those G-Wagons and Range Rovers and, well, hey, your pickup trucks, right? You're going to get 100% tax deduction. They've also expanded the Section 179 expense cap up to $2.5 million. So this almost doubles that expense for this year, which is exciting for those businesses who need to take advantage of that. Beginning in 2026, If you file a lot of 1099s, right, that threshold will increase from $600 to $2,000 for that 1099 miscellaneous form if you have a lot of vendors or things that you work with. Some other things to take note of, they're going to repeal several of the green energy tax credits that were brought because of the Inflation Reduction Act back in 2002. So if you're in the market for an electric vehicle, those are going to expire, those tax credits, on September 30th, 2025. So you've got to get in there quickly to the dealership and get that vehicle. Residential energy efficient credits are going to go away as of December 31st, 2025. So you want to be on top of that if you're installing solar or doing some things to the home with some residential energy efficient appliances. And then last but not least, if you're someone that was going to be affected by the estate tax exemption being lowered or expiring at the end of this year, well, you do have a reprieve because the estate tax deduction has been permanently increased up to $15 million for single filers and $30 million for joint filers beginning in 2026. And what that means, it's going to increase every single year with an inflation index. And if you have an estate, so what happens when you die is they add up the total value of your estate, and they add up your real estate assets, they add up your personal property, they add up all the cash in your bank accounts, they add up your life insurance. And if that's over $15 million, the amount between $15 million and whatever that delta is, right? If it's $20 million, you're going to pay about a 45% tax on that extra $5 million. Now, if you're married filing joint, right, that's $30 million. So you can have more assets as part of that calculation. So that becomes really, really interesting as you plan for legacy and wealth planning and wealth preservation planning. So there's a lot to unpack in this bill. I did not cover all of it. There's a lot of really interesting things that you can read out on the internet about this bill. But if you do have questions, don't hesitate to reach out to us here at the Tax Planning Pros. Reach out to your tax advisor. And, we want to make sure that you pay the least amount of tax possible this year, as some of these provisions become permanent and are in the tax code as of today, retroactive, and some provisions won't come online until next year. So you'll want to know what those provisions are. And so it's important that you consult with a tax professional. As always, you can book a call with our team down below to get that all sorted away. So it finally happened. I didn't think it was going to happen by July 4th. I feel like this bill has taken forever to come to fruition. But now that it's over, now we can focus the remainder of the year on planning, utilizing this bill and utilizing some really, really great tax strategies as we go into the remaining months of the year. And if you haven't started planning for your tax bill in 2025, or maybe you're having too much withheld and you're giving the government an interest-free loan, maybe it's time to get some of that money back today by lowering that withholding and planning for taxes and what your actual tax liability is going to be. Also, you could take a look at some tax advantage investments and things like that. So once again, I'm Jeff Trapp with the Jeff Trapp Podcast and the Tax Planning Pros. And thank you so much for joining me today as we unpack the one big, beautiful tax bill. Have a great day. Bye-bye.